Active Investor here, bringing you another independent analysis. This time we're taking a look at ticker symbol FIT, that's Fitbit Incorporated. The chart we're looking at here today is a one-day chart. Each candlestick on this chart representing 1 day of trading. We go back all the way to right around January of this year. We had a big selling off all the way at January 5th, that was, right at the start of the new year. Heck of a way to start the new year, right? And I would just like to give a shout out to Nobody Tricked Me for requesting this fit analysis. Hope this helps you out. Let's take a look at the chart. Alright, so I'm going to be honest with you. This chart's not looking very good to me. Reasons for that: 50-day moving average, that yellow line. We never want that to be above our candles. You can see when it's below our candles, that signals that we are in an uptrend. And it's currently trading right above our candles, so we're in a bit of a downtrend right now. But it's been above our candles since right around here. Incidentally, that was right when we had that earnings release. You can see there we had earnings. So what looks like happened is the earnings were bad and we had a selling off. Now you can see that same thing happened right about here. We had bad earnings most likely and some selling off. Dipped all the way to 1191 where it made that 52-week low. And then it really kind of trailed back up, made some higher lows. You know, it really tried to get back up there, and it did get back up there all the way to about $19, 1878 to be more specific. That's the area of resistance that is our pivot point. Got denied at 1878, and then it kind of fell down. Now, what's sad is that these two candles were actually pretty good. This one was really bullish, and this bearish candle was almost a pin bar candle. So it was about to turn around and about to press up for 1878 again. And if 1878 broke to the upside, there is a huge gap of potential all the way to 2777. However, we had, once again, as we saw, some bad earnings, it looks like, and that's when the price just tumbled back down to that 1350 level. It seems like FIT really loves to hang around 1350. So it's pretty sad. If 1350 breaks, the next area of support's 1235. And if 1235 breaks, there's not really any support, and you're most likely going to test that 1191 low and maybe even get lower than that. So 1350 really needs to hold. If it doesn't hold, 1235 really needs to hold. If 1235 doesn't hold, it's going to get really ugly. What else? Our relative strength index isn't looking good, I can't lie. We're right in what I like to call no man's land, which means that we could just see some channeling. Fitting that idea, get it, Fitbit, is the fact that we've been channeling for a while here. Now, our RSI wasn't in no man's land this entire time, but it really didn't go overbought for long, and when it did go overbought, it kind of crashed right back down again. Now, we want it to be overbought. When it's overbought, that's when we can see the price increase. For example, over here, when we were overbought, that's when we saw the price run up. So we want to hang out up here above the 80 line on our RSI so we can see that people are really willing to keep buying this thing and raising that price. Right now, you can see both averages are pointing down, and actually our fast green average here on the RSI is actually getting oversold. So it's starting to get oversold, which means there's a lot of selling pressure. So it's looking to me like it's going to test that 1350 area, unfortunately. Also looking really bad is that 10 simple moving average, that purple line. It's about to cross the 20 period moving average, and that means we're going to have the 50 and then the 20 and then the 13, which is the bearish formation. We want it to be like it is over here, with the purple on top and then the green and then the yellow. And what just happened here is that the purple and green are about to cross bearishly. So honestly, my friend, I wish I could have better news for you, but this chart is not looking good in my opinion. Really the only thing that looks good to me on this chart is the fact that if we can somehow get all the way back to 1878, there is that major gap of potential to 2777, but it's going to take a lot of work to get back up there. But honestly, that's really the only good thing I can see about this stock is that gap of potential, because from 1878, there's really not much resistance all the way to 2777. So a lot of gap up potential, but we're not really close to 1878 right now, trading at right about $14.10. So honestly, it's looking more like it wants to test 1350 again than it wants to move up and test 1550, 1706, and finally 1878. before gapping up to 2077. I wish I could say that that was the most likely situation, but based on the technicals, it really looks like it wants to test 1350. Now we should have earnings coming up in about a month or so, and if those earnings are good, I think that Fit could have a chance at running, but so far the earnings haven't been showing much bullishness at all. So overall, the chart isn't looking great, I'm sorry to say. Anyways, I hope this analysis helped you out at least a little bit. You know, that gap of potential is there, but it's going to take a lot of work, and overall, it does look like we'll see 1350 again. So I hope this analysis helped you out. I'm sorry the news isn't better. And anyone else watching, I hope you enjoyed this, and I'll catch you in the next video. Have a good one.